Everyone, it's V, the Grill Economist, and if you're listening to us on YouTube, you're listening to the free session of Algo Factory Tech. And you don't want to be always listening to the free stuff. You need to get into the meat and potatoes of what the heck it is that we do around here. And you need to see the brilliance of the professor himself, the one and only Cowboy, doing his thing as we break down trading, show you how it's done, and explain to you how to construct your own algorithms, back testing tools, so you can be successful in what you do. We teach you to fish so you can eat a lifetime. We teach you to pilfer and carve profits from the market daily. And you don't want to just be on the outskirts. You need to join. You need to join because it's one of the most powerful things you can do. With that being said, Cowboy, good morning. Let's get into it, bro.
Yeah, we're gonna do that. I'm spreading that link, spreading the love. Give me just 1 second to pop that up. I've had to send our link over to, oh wait, don't do that. Over to what do you call it? Our rogue listeners, our Discord, so that way they can hop on YouTube as well. So yeah, today is a big day. So, those who are in our private group will often, lately every night, see me out around midnight, my time, so 2 a.m. EST, over in the our Telegram, which is where we do all of our stuff for a private group. And I'm usually there trading, looking for trades around that time, doing the London session. And of course, I come on now and I'll look for. I'll usually have stuff kind of set up before the session happens. However, because when you trade, you kind of look for things that'll happen depending on how you trade, maybe in like a few hours or maybe in a couple of days, whatever that is. And so the way I do it is, I'm going to tell you how I do it, but I got to do something real quick. Give me 2 seconds. So I'm more of a day trader and a swing trader. I do both, day and swing. All right, so what does that mean? Well, a day trader is somebody who finds a trade using technical, mostly, almost always going to be like a technical trader. So looking at the charts, looking at the data that's on the charts itself, mostly that kind of data to determine, okay, I'm going to enter this trade. And usually you're out within a few hours, okay? So that's a day trader. Now, a swing trader is somebody who usually they have maybe like full-time work or they have enough going on to where they can't like be in front of the computer all day long. So they look for trades that are going to form up, say, over a day or two. It's like, okay, I think this trade might happen tomorrow. And then they enter that trade and they usually exit within like anywhere from another day. So it's like a 24-hour period. Say maybe they enter at, 9 a.m. on a Tuesday and they exit on 2 p.m. or 4 p.m. or 6 p.m. on a Wednesday or Thursday or maybe even the end of that week. Or so that's a swing trader. And most traders, it seems, I don't know what the real statistics are, just kind of telling you what it seems like to me. Most traders are going to be swing traders, right? People who have full-time jobs. So the way that we designed Algo Factory, okay, and I'm going to throw the link up real quick here. www.algofactory.tech. Also, if you are like on the YouTubes, you can just go to our main page and all of our links are going to be available right there for you guys to see as well. So what we do over there is we have designed a curriculum to help people build their trading plan. And anytime you have a plan that you're trading from a technical standpoint, it's going to be an algorithm. Even if you're like an old school trader that you're not using any computer programs or anything like that, you're trading based on an algorithm if you're successful, because all you're doing is you are following a plan. So you have the market conditions line up, market condition A, market condition B, market condition C, whatever it is, and then you take actions X, Y, and Z. And that is an algorithm. As I like to say, tying your shoes is an algorithm. Driving to the store is an algorithm. You take a left here, you take a right there. If this road is closed, then you take a left here and you do the same thing pretty much every time. So don't get scared. Don't think that this is above you. If you are a beginner trader, this is well within your grasp. Now, the Grill and I had a really good conversation yesterday with somebody who is just an OG, like an original gangster when it comes to actually hard coding algorithms. So
Real
we do
OG.
a real OG. So we are of course able to. I've been the two of us actually through one of your contacts and through one of my own. We have had the ability to direct people over to a coder who could get something coded for a fraction of the normal price. So the ability to hard code your algorithm through us has always been there. Although that ability seems to have grown by leaps and bounds over the last week or so due to some relationships. So what that means, what is hard coding? Hard coding is basically where you are going to take your algorithm and you're going to use not artificial intelligence. I mean, it's the equivalent of AI. AI is actually more of a marketing term at this point. They're not really, that's how Gorilla says that really well. It's a marketing term. Most AI, the better way to talk about that is going to be automation rather than artificial intelligence. It's just automation. And that kind of automation, that quote unquote AI, hard coding an algorithm is going to be akin to that. And that's something that we can help you get into once you've actually built an algorithm. And then we're going to go ahead and we're going to expand into using code to help yourself build that algorithm. Although I've done both. I've helped somebody code my algorithm before, and I've done it manually as well. I do find that doing it manually is going to give you a form of insight that you do not otherwise see. So, I do recommend, at least for my own style, to do things manually at first. And then once that is the case, once you have something that you have actually tested and you've really gotten your hands into the dirt, and I mean the dirt like a garden, not like a cesspool, but when you've actually, got your hands on the machine, working on under the engine, and you got a feel for it. And then you can, you can invest a relatively small amount of money to have that hard coded, so you can certainly just walk away, have it trade for you. But what needs to be understood is that is a process that needs refinement. Okay, having somebody hard code your algorithm is going to be very different. Not very different, but there is a difference between manually doing so and then hard coding it, because you have to do it in a language that the computer understands. And then when you do that, it's going to change the way things trade. So you have to spend some time actually learning how to do that as well. And we are all aiming towards that. People who want to begin that process can come over to Algo Factory. Again, the website is www.algofactory.tech. I also put on the screen here for those over in YouTube land a QR code.
That is
so
sick.
It's right.
You're gonna surprise me with this QR code. I like that, dude.
Did you like that?
Yeah.
You go away for a week and I figure stuff out.
I had to go away for another week. I want to know what else you come up with.
Right? Oh yeah. Well,
that's. Dude, I hate going away, man, because every time I come back, it's like a mountain of crap waiting for me.
Yeah, that's why I don't really take vacations. I just don't. If I'm going to do a vacation, I just have to understand that when I come back, there's a mountain of crap.
Yep.
And this is why I got into trading, because essentially I can, even if I go away for a week or two, I can still keep my eye on the market. I can even trade to make some money. A lot of things sort of go by the wayside, but at the same time, you can still stay in sync with the market unless you really, really want to get away. And then just like anybody else, you take a vacation, you come back, and you got to deal with the fallout. But here, this QR code will get you over to our website, and you can go ahead and $49.99 a month is a steal. Like, what people don't understand is that this service is worth like $300 a month as compared to other services that do what we do, right? But we did it on a shoestring budget, if you will, which is a lot of money anyway. And so, we're keeping the price low so people can come in. And while it's early, now this price is not going to last. So understand that, we got to keep the doors open and the lights on. We're going to have to raise the price. But for now, it's at $49.99. And anybody who is with us will be able to, if we raise the price, let's just say we did it next month. I don't think that's going to happen, but it could. If we raise the price next month, say to $99.99, anybody who is in at $49.99 is going to be able to keep that price. They're going to be grandfathered in because they trusted us with their time and money while we were a new outfit. Okay, now we're not that new. We've done this before. This is actually not our first rodeo into this kind of thing. But either way, we're giving people a chance who give us a chance. Okay, so that's the sales pitch. So yeah, we got some pretty big stuff going on today, V. We got FOMC, we got PPI
Today's
that
the
just
day.
came out. Today's the day. So FOMC is the Federal Reserve, the Fed Open Market Committee. Okay, so they're going to have a bunch of language. It happens at 2 p.m. EST, so that's let's see, 6. That's in 5 hours and 15 minutes. They just did PPI, which threw the charts for a loop. So we'll take a look at the charts in a minute. On days like this, I don't trade. Usually I'll stay up, trade the European session. In fact, the London Open, as it were. There was a great trade that I could have taken part in, and it happened at, say, right about the Open, right about midnight. But whenever the FOMCs happen in the next day, usually the volume isn't that great. I did have some indication that there would be bigger volume than usual for a day like that last night. I did get that intel, actually, but I don't risk it usually. I'm not going to mess around before FOMC, especially this is one of the biggest FOMCs. Okay, so what is happening right now? And this is anybody who's kind of watching Rogue and really paying attention to what we're talking about the last 2 years or 10 years is going to understand what the FOMC is about today. But if you don't, we're going to explain it to you. Okay, so FOMC is where they are going to announce the decision on whether or not to hike the prime rate. The prime rate is the rate at which the Federal Reserve is going to lend its money out to the commercial banks, right? So that's how money creation works. You have the Treasury. Let's see if I can remember how this. It's almost like it doesn't matter how it works now because they're just printing money out of thin air. But basically, they take treasuries and they create the 10-year bond, and there's an exchange. And essentially, what they do is those treasuries are collateral on top of which they can create the 10-year bond, right? So that money will go towards the commercial banks, and then the commercial banks will lend in turn that money out to smaller banks and also out to non-banks such as asset managers like BlackRock and so on and so forth. And the first people to get that money get the most benefit because that money gets to them before it hits the rest of the market and causes inflation. So in a sense, the first people to get the money, it's free to them. It really is basically free to them. And they get to make money by lending it out to other people. And then when they lend out about 10 times as much, if not way more, because of the basically 1% or less reserve requirement that banks have now. It's essentially
fractional reserve lending.
Fractional reserve lending. So I don't want to get too far into the nuts and bolts of that. That's not what this beginner show is about. But what does matter is that the higher the prime rate, the more expensive it is to borrow money. Now, all the money going into the market, the stock market, all the CFDs, that's not in the US. I think those are forbidden now, but your EFTs, your indexes, all of your products out there, your derivatives that are based here in the US and effectively all around the world, that rate at which money enters those is going to be affected by the prime rate. And why is that? Well, because all the money going into the market is essentially borrowed money at this point. In fact, all the money in existence is essentially borrowed money at this point. What they're doing is they're monetizing the debt. So taking that treasury and creating 10-year bonds based on the collateralized treasury, okay, what that does is that they're monetizing the debt. They're taking debt and making money out of it. They're making money like literally out of thin air and promising to pay it back later and then collateralizing it with your children's labor, with your grandchildren's tax receipts. They're going to happen in 50 years or, well, really 20 or 30 years. So basically your kids' stuff, depending on how old you are. So that's the way money is. That's how it's created. And when money gets expensive, then it's harder to get money to put into the market. It's harder to inflate the Dow. It's harder for these non-banks, these Vanguards and State Street and all that, harder for them to continue to pump money into the Dow and the S&P 500, and then those things tend to go down. Okay, now The effect of this, though, tends to be a lagging effect, and we've looked at the charts in the private group to where we can see where the smart money realized that the change was coming, and so the everything kind of reversed. Now, as the Fed rate goes up, what that tends to do is it makes the dollar stronger, and when the dollar gets stronger, this is when it's like costs more money to borrow money and to put it into the market, and then the market goes down. Well, we have noticed that the market has stopped going down, and in fact, you have these kind of a hint of a bull market going on right now. Now, does that mean it's going to continue, or is this more of a last gasp before we see another move down? Is this a technical bounce up and then we see a move back down? I think it's quite possible. Although I think we're going to have maybe a summer of love where we get some some nice inflating assets, at least for a bit, or maybe some sideways action, or maybe sideways and up. I do think later this year there's going to be some volatility to the downside. Okay, but for now, today, the FOMC, what a lot of people anticipate is that the FOMC is going to not hike rates. They think they're going to do like a skip, right? So there's a skip and a pause. It's two different things. Right now, I think the terminal rate they're looking at in the mid fives. That means that when they're done hiking and inflation is quote unquote brought under control, because that's how they're hiking the Fed rate, they're hiking the prime rate supposedly to bring inflation under control. There is a measure of fudgery when it comes to the numbers that come out for inflation, but CPI yesterday came out the lowest it's been in probably, I think, years. I think since like April of, 2021, it was one of the lowest prime rates. And as I'm about to show on the screen, go ahead and do this. We're going to go look at forexfactory.com, which forexfactory.com is the site that I use for data, for economic data announcements. For example, looking at the calendar yesterday, you have CPI, and we talked about this on the show yesterday. You have CPI, month over month was half of what was expected. Actually, it was the next notch down. So that seems dramatic, but it's actually just the next notch down. It seems they only move in basis points. In tens of basis points. So you got 0.1% instead of 0.2. The CPI year over year, which is the consumer price index, which is a measure of inflation for consumers, instead of month over month, which was 0.1 instead of 0.2% gain, you actually had a 4% move instead of a 4.1. So it was slightly lower. Core CPI, which is a measure of inflation for the consumers that excludes food and energy, was as expected. So overall, inflation went down, or at least I should say less than expected. It's still going up, just less than expected. So that gives the Fed kind of this idea that they might be able to reduce their Fed rate, or at least not hike it up, and see if inflation continues to fall. Are these numbers real? Maybe, maybe not. Inflation's been fudged for quite a while, so real inflation's another story. But at least the numbers that matter to the market, the Fed may simply say, we're going to take a month off from hiking. We may hike in the future, but this month we're not going to hike. There's a lot of people who expect that to happen. Now, we have today core PPI month over month, and this is actually the manufacturing inflation. Okay, so PPI, remember, we're not really paying as much attention to the charts today because we have at 2 p.m. USD the FOMC economic projections, right? So we have the FOMC statement and the Fed rate. Those are the big ones. And then the press conference afterwards, which, the press conference is where people just sit there and they listen to Powell and try to kind of, they mince and what's the word? They scrutinize every single word to try to determine what they're going to do. And, if you're trading during that time, you're insane, because over that 30, 45 minute period, Powell will say things that make it look like this is going to happen, and then he'll say something else that makes it look like the opposite is going to happen, and the price just goes left and right. So this is why I don't trade on a day like this. But at least the PPI coming out this morning, the core PPI, which excludes, let me see, how do they measure that? I think it means excludes food and energy. Yeah, so the core PPI, which is the producer, the manufacturing side of inflation, was as expected. And then the PPI that doesn't, the actual food and energy inclusion number was quite a bit lower than expected. it was actually down a fair amount. So down 2 notches, if you will. So that means the Fed can say, oh, well, we have gotten inflation. It's starting to look like it's coming under control. And what I think they're going to say is they're going to say, look, it went down this month. It looks like our hiking has done the job. We're going to go ahead and pause hikes. But we're going to watch the data, because if inflation goes back up, we're going to have to hike it again. And then maybe that'll happen for a couple of months. And then maybe during, say, the end of quarter 3, beginning of quarter 4, we might see these numbers go back up, and then we're going to have to like start hiking rates. That's how I think it's going to go. And that's just based on like, a gestalt of all the data that, that I've seen over the last ever, but especially the last few months. And that's going to affect the markets very much. If they pause a rate hike, like not if they say they may hike in the future, but they just for now, they're not going to hike. I think asset prices will actually be kind of strong for a little bit, or at least sideways. Now, if they say that they're actually going to stop hiking, that they're done hiking and they're not going to hike anymore, if they say that with like on no uncertain terms, historically, the market has gone down. Okay, that's very counterintuitive. Everybody thinks that a Fed hike pause. Everybody thinks that, okay, we're not going to hike rates. That's it. Everybody thinks that means, money is going to get cheap and the market's going to go up and go long. Historically, that's not been the case. Anytime there's been a pivot and they start cutting rates, right as soon as they start cutting, asset prices fall. So be careful with that, because most people think the opposite is going to happen. Even now, even though the data is very clear over history, I can show you the chart. However, I would be interested, now that we've kind of explained this in great detail, V, what do you think is going to happen at FOMC today? Do you think we're going to see a pause? Do you think we're going to see a skip, which is basically we might hike in the future, but we're not going to hike today? Or do you think we're going to see it? You can see a skip, like I think, right?
Yep.
All right. So basically you're looking at that, like, okay, so, we're going to see how this goes for a while. We're going to keep the rate where it is, and we're just going to, maybe hike later. That's a skip, right?
Yep.
So anyway, today was, more of an education on, because again, today is not a day where I'm going to trade, not with this kind of news coming out. So looking at the charts and stuff like that, I think it's really helpful to understand the back end of what's going on. So we made today more of a fundamental day, if you will. So we do only have a few minutes left in the beginner live lab. V, do you have anything that you want to add before you give us the gorilla send off?
No, I think you did great, man. Let's get into the lab. Let's get excited. Let's, work with our members, and let's get into the nitty gritty.
All right, everybody. So here again is the QR code. Flash your phone on that, and that'll take you over to our website. That way you don't have to just write down the link. Also, if you're on YouTube and you don't do it this way, just go to the main page. All of our links are right there on our profile page on YouTube. And then for those who do want to see the link, there you go. It's www.algofactory.tech. That's the URL. So either way, come see us and understand that $49.99 a month is an absolute steal. It's not going to last. We hope to see you over there. And